Hi everyone, welcome back to FinVision, where we decode the world of finance and empower you to make smarter decisions. Today, we're diving deep into the psychological battlefield of crypto trading, the emotional traps of crypto trading. Trading in crypto feels like a roller coaster. Prices pump 20% one day, crash 30% the next. Most traders lose because they fall into emotional traps like FOMO, fear and panic selling, greed and overtrading. These emotions can hijack your decision-making and lead to costly mistakes. But here's the good news. Once you understand these traps, you can learn to avoid them and trade with a clear, strategic mind. Alright, let's talk about FOMO, the fear of missing out. We've all been there. You're scrolling through Twitter and suddenly everyone's talking about this new coin that's mooning. Charts are going vertical. People are posting screenshots of their massive gains, and you're starting to feel that itch, that urge to jump in before it's too late. You see Bitcoin skyrocketing and jump in at the top, only to watch it crash. That, my friends, is FOMO in action. You get caught up in the hype, the social proof, the fear that everyone else is getting rich but you. Your rational mind goes out the window, and you end up buying at the worst possible time, the peak. Then, just as quickly as it went up, the price corrects. The people who got in early start taking profits, and suddenly that rocket ship you thought you were on turns into a freefall. You panic, you sell at a loss, and you're left feeling like you just got played. But here's the thing about FOMO, it thrives on a lack of information and a surplus of emotion. When you don't have a solid understanding of the asset you're investing in, you're more likely to be swayed by hype and speculation. So how do you combat FOMO? First, remember that there's always another opportunity in the market. Just because you missed out on one pump doesn't mean there won't be another one. Second, do your own research. Don't just blindly follow the crowd. Understand the fundamentals of the asset, the team behind it, and the long-term potential. And most importantly, stick to your trading plan. Having a plan helps you stay disciplined and avoid making impulsive decisions based on emotion. Remember, successful trading is about making calculated moves, not emotional ones. Don't let FOMO turn you into a story of regret. Stay informed, stay disciplined, and trade smart. Let's talk about another emotional trap that can wreak havoc on your crypto portfolio: fear and panic selling. This is a common pitfall that many investors, both new and experienced, fall into when the market takes a downturn. Imagine this. You've done your research, you've invested in a project you believe in, and things are looking good. Your confidence is high, and you're optimistic about the future. Then, bam, the market takes a dip. It happens suddenly, and it catches you off guard. A small dip makes you sell in panic right before the price bounces back. This knee-jerk reaction can be detrimental to your portfolio. Suddenly that sea of green on your portfolio turns into a bloodbath of red. Your gains evaporate and you're left with significant losses. You start to second-guess yourself, questioning your investment thesis, wondering if you made a huge mistake. Doubt creeps in, and it becomes hard to think clearly. The news headlines don't help either. They're filled with doom and gloom predictions, amplifying the fear and uncertainty in the market. It's easy to get swept up in the negativity. You see other people panic selling, and it feeds into your own anxiety. The herd mentality takes over, and you feel the pressure to follow suit. The urge to sell, to get out before it gets any worse, becomes overwhelming. It's a natural response to fear, but it's often the wrong move. And that's when you do it. You hit the sell button, locking in your losses and missing out on the potential rebound. The regret sets in almost immediately. Panic selling is often driven by a herd mentality. We see others selling and we assume they know something we don't. We see others selling and we assume they know something we don't. This can lead to a cascade of selling, driving prices even lower. So how do you avoid falling into this trap? It's crucial to have a plan and stick to it, even when emotions are running high. First, remember that volatility is a natural part of the crypto market. Price swings are inevitable. Accepting this can help you stay calm during downturns. Don't let short-term fluctuations shake your long-term conviction. Stay focused on your long-term goals and the reasons you invested in the first place. Second, zoom out and look at the bigger picture. Short-term dips are often just noise in the grand scheme of things. Is the dip a result of a fundamental change in the project, or is it just a temporary market correction? Understanding the cause can help you make informed decisions. If your investment thesis is still intact, there's no need to panic. Trust in your research and the reasons you invested. Finally, have an exit strategy in place before you even enter a trade. This can provide a clear plan of action when emotions are high. Knowing your risk tolerance and having predefined exit points can help you stay disciplined and avoid making emotional decisions in the heat of the moment. This discipline is key to long-term success. Remember, fear is a powerful emotion, but it doesn't have to control your trading decisions. Take a step back, breathe, and stick to your plan. Stay calm, stay rational, and don't let panic selling erode your profits. Your future self will thank you for it. Greed, my friends, is a powerful drug. It can cloud your judgment and make you see things that aren't really there. It can turn even the most level-headed investor into a reckless gambler, willing to risk it all for the chance of a big win. In the world of crypto, where fortunes can be made and lost overnight, greed can be especially dangerous. The volatility of the market can lure you into a false sense of security. You've probably heard the saying, "Bulls make money, bears make money, pigs get slaughtered." This saying holds true in the crypto market as well. Well, in the crypto market, greed is the butcher. It can lead you to hold on to your investments for too long, hoping for more profits. Holding too long, waiting for even more profits, only to watch them disappear. The market can turn against you in an instant. You get greedy when you let your winning trades run for too long, hoping for just a little bit more profit, only to see your gains evaporate as quickly as they appeared. It's a dangerous game. Greed whispers in your ear, telling you that the price will keep going up forever, that there's no end in sight, that you're a genius trader, that you have a special insight that others don't, that you're destined for unimaginable riches. The allure of a luxurious lifestyle can be very tempting. But here's the truth. The market doesn't care about your feelings or your aspirations. It operates on its own logic. It's driven by supply and demand, by news and sentiment, by a million different factors that are impossible to predict with 100% certainty. No one can control it. And when greed takes over, you lose sight of this reality. You start to believe in your own invincibility. You become blind to the risks, deaf to the warning signs, and ultimately, you set yourself up for disappointment. The market's reality will eventually catch up with you. So how do you keep greed in check? It's not easy, but it's essential for long-term success. First, remember that profits are not real until you take them. Unrealized gains are just numbers on a screen. It's easy to get caught up in the excitement of a winning trade, but it's important to remember that unrealized gains can disappear just as quickly as they appeared. The market can be unforgiving. Second, set realistic profit targets and stick to them. Discipline is key. Don't get greedy and chase unrealistic returns. It's a recipe for disaster. It's better to take a small profit than to risk losing everything by getting too greedy. Small, consistent gains add up over time. Finally, remember that there's always another opportunity in the market. The market is vast and full of possibilities. Don't get so caught up in one trade that you miss out on the next big thing. Keep your eyes open for new opportunities. Greed might be good in the movies, but in the real world of crypto trading, it's a recipe for disaster. The consequences are real and can be severe. Stay disciplined, stay grounded, and remember that slow and steady wins the race. Consistency and patience are your best allies in the market. Let's talk about another silent killer of crypto profits: over trading. You see, in the fast-paced world of crypto, it's easy to get caught up in the action. The market is open 24/7, there's always a new coin to trade, and the fear of missing out can be intense. Jumping into every trade, chasing quick gains, only to end up losing more. You feel like you need to be constantly in the market, making trades, chasing every little price movement. But here's the thing. More trades don't necessarily equal more profits. In fact, overtrading can be one of the fastest ways to deplete your account. Every time you enter a trade, you incur trading fees. And the more you trade, the more those fees eat into your profits. Not only that, but overtrading can lead to impulsive decisions. When you're constantly glued to the charts, you're more likely to make emotional trades based on gut feeling rather than sound analysis. And let's be honest, how often do those gut-feeling trades actually work out in your favor? Overtrading is often a sign of boredom, impatience, or a lack of a solid trading plan. You're not trading with a purpose, you're just trading for the sake of trading. So, how do you avoid the overtrading trap? First, develop a trading plan and stick to it. Your plan should outline your entry and exit points, your risk management strategy, and the assets you're comfortable trading. Second, don't be afraid to sit on your hands. Sometimes the best trade is the one you don't take. If you don't see a high probability setup that aligns with your trading plan, don't force it. Remember, patience is a virtue in trading. And finally, Focus on quality over quantity. Instead of trying to catch every single price movement, focus on identifying high-probability setups that align with your trading style and risk tolerance. Remember, trading is a marathon, not a sprint. Don't burn yourself out by overtrading. Stay focused, stay disciplined, and let the profits come to you. Remember, the market will always be there, but your capital won't if you don't manage it wisely. Take breaks, reassess your strategies, and always trade with a clear mind. Crypto trading isn't about making money fast, it's about making money smart. Train your mind and profits will follow. Remember, trading is as much about psychology as it is about technical analysis. By understanding and overcoming these emotional traps, you'll be well on your way to becoming a more disciplined, consistent, and profitable trader. If you want to become a successful trader, mastering your psychology is the most important step. If this helped, smash that like button and subscribe for more expert crypto insights. Drop a comment below. What's your biggest struggle in trading psychology? Let's help each other out.